Hi everyone, today let's talk about CPI, as well as the economic calendars, then we'll get into the charts, as well as my abysmal results and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So CPI came in pretty good. It was better than expectations, but still a little bit higher than the previous read. I wasn't really expecting this. I thought that it was going to come back a little bit higher than expectations because we have seen fuel continuing to go higher. And it was higher, just not as much higher as I expected. Expectations were 3.3%. Previous read was 3%, so 10% increase. From the previous read, we ended up getting 3.2, so a little better than expectations. You can see that here. June read was 3%, current read 3.3, so up a little bit. But the big thing here is that core is continuing to trail down. We're not seeing a big jump in headline as core continues to move lower. Moving over to the economic calendar, you can see that here, 4.7%, slightly better than expectations, 3.2, better than 3.3. The interesting part here, though, is that the Fed balance sheet was actually $1 billion higher than the previous week. They've been offloading pretty consistently, but they didn't actually offload anything this week. So kind of strange. Jobless claims also higher than expectations here. Federal budget way higher than expectations. Definitely not what you want to see. Looking at tomorrow, don't forget core and headline PPI at 8:30 Eastern. And of course, we got the Michigan numbers in the morning at 10 o'clock. Moving over to max pain, you can see that low here at 447. We're $1 below that, so we might see a little bit of a rally into this zone here between 447 and 450 for tomorrow. That would be interesting. I do think 447 is going to be a solid baseline. 455 is the top that I would expect. That would obviously be a really strong rally for tomorrow, and I don't think that's going to happen. But I could absolutely see a finish about $1, maybe 0.5% higher than current levels. Moving over to the charts, you can see S&Ps on the hourly, big wicks to both directions, hit that 144 EMA, rejected very strongly all the way down to the bottom of the range, tested yesterday's lows, ended up right in the middle here, right on top of that trend line. And we've been sideways for 3 days in a row now. You can see that same structure here, rallied up, consolidated, moved lower, and starting to taper sideways. If we're going to rally back up into this 453 area, you would think we'll start to see that rally tomorrow, potentially get up and test that 55 EMA on the 4-hour chart up at 452.18. Got close to that here today, still holding this support level. Looks like a decent setup for a rally tomorrow. You can see just how much volume there was today, continuing to see building volume in a consolidation, indicating a potential move higher over the next day or two. Moving over to the NASDAQ, you can see a similar thesis. It is still downtrending, but the low was basically the same as the wick low from yesterday. I really adjusted my levels here as I was getting really chopped up in the middle of the range. Tried to get in on the rally, got stopped out, pulled back, didn't participate in the down move as much as I should have, and then got chopped up at the end of the day. Just a really tough day of trading, and you can see that here we're downtrending and it's coming to a point between that 200 SMA and that downtrend line. We're right here now, waiting to see what we get. And like I said before, it would make sense to see at least a little bit of a rally, set up a bigger lower high from these previous levels after this down move, get some kind of retrace, and then I would expect a continuation lower over the next week or two. Moving over to the Russell and the Dow, Russell continues to chop lower. 144 EMA on the 4-hour chart continues to hold. That is a key level at 190.77. If that breaks, I'm watching 189 or the 200 SMA at 188.73. Either way, this has still been holding up fairly well. Dow continues to chop in this same zone. Big wick up to almost these previous highs, but then we finished right back in the middle of the range. Moving over to Apple and Tesla, Apple continues to hold right at this level. We've been talking about it for a bit now. Momentum's slightly bullish. We're not seeing any price action yet. Certainly could just be waiting for this 21 EMA to consolidate back in this zone before we see a start to a little bit of a retrace back up to maybe 187. That would be interesting. Up around the 200 SMA on the 4-hour chart. Tesla, slight retrace day, still below the 9 EMA on the 4-hour chart. I would expect this to continue lower here tomorrow. Still looking at 323.84. Moving over to staples and discretionary, staples continuing to consolidate through wick up to the 55 EMA at 75.45, very interesting, and then broke down right down to the 144, so we're kind of trapped in that range now. Discretionary also consolidating, tightening up. We've been in this same range for a while now. I still think this is looking to roll over and push back down to the 200. The 55 EMA continues to be resistance, but that 144 is still holding up. We're coming to a point and we'll get some direction on discretionary soon. Moving over to transports, you can see we've had a similar consolidation to the other things that we've been looking at. Daily chart through wick up to VWAP. Momentum still bearish. Moving over to the 4-hour chart, doesn't really give us very much information here. I was hoping to see a little bit of something for support. You could argue this consolidation from 12 July, fairly interesting. Overall, still a downtrend, but it did show a little bit of strength today. Moving over to breadth, you can see we are in a key area. Momentum is fading in this zone, starting to tip back towards bullish. 200 doing similar things here, holding at the 55. Looking for a little bit of a pullback into tomorrow, just like we saw on Max Pain. Moving over to yields, 2-year and 10-year going up here today. You can see that candle touch the 55 on the daily chart on the 2-year, rallied back up into the middle of the zone, looking a little bit more bullish. 10-year pushing up much higher, back above these mid-July highs, looking back to the early August highs, touched that level, rallied really aggressively on CPI. So we have CPI going a little bit higher and yields going higher with them, even though CPI came in better than expectations. Moving over to the dollar, relatively uneventful, dipped into the CPI report, rallied into the end of day, still holding in this zone. I thought we might either get a breakdown or a breakout on CPI, but it was less eventful than I expected. And you can see that here on the daily chart, big wick to support, still holding in the zone. If it's going to break out, you'd like it to do it soon, give us some clear direction, but it seems like everything is in a little bit of a holding pattern. Moving over to JNK and TLT, big wick higher, ended up red candle. TLT breaking down massively on the higher CPI, yields going higher, TLT going lower. We talked about this being weak at the 9 EMA and expecting that to break down, which ended up happening. More surprisingly was JNK pushing up very close to 92.50 and then rejecting down towards the end of the session. Moving over to the volatility indices, MOVE index falling even though TLT went lower. Interesting. VIX, on the other hand, big wicks to both sides, ended up holding in the zone. It didn't pull back as much as I would have expected on this CPI report not being very eventful. So you do have to continue to watch it. And honestly, that makes me think the VIX might be going a little bit higher in the shorter term, which is a little bit counter to my overall thesis. Moving over to my accounts, you can see I absolutely took it on the chin. I had no positions going into the day, and I tried to get in on the rally, like I said, which obviously reversed and chewed me up. And then I got stopped out of a few positions. I held on to some options, which helped cushion the blow. Obviously not very much, definitely down a little bit more than 1% on the day, which is not what you like to see. Going into tomorrow, I'm still neutralized. We said everything's in a little bit of a holding pattern, but I am expecting a rally out of this base, at least to some degree. Let me know down in the comment section what you thought of the CPI report or the price action that we're seeing right now. Are you a little bit bullish or are you looking for another breakdown? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.